Good evening, everyone. We are live from Chicago. Today is Thursday, July 11th. I'm Charles Brown, Portfolio Manager with CB3 Financial. We are super glad you're with us tonight on a really special show, and I'll tell you more about that in just a little bit. So, AI cybersecurity. We all know that security on the internet is a really big deal, and we have someone tonight as a special guest who's going to address that for us. More market highs. Believe it or not, we hit the 40th. That's 40 market S&P highs this year. We hit it earlier today. We didn't sustain it. We have 39 closing highs and one intraday high that didn't hold, obviously, and we'll talk more about what happened today. But it's a really interesting time here in the usual summer doldrums. If you're new to the program, please click on the button in YouTube and subscribe to us. Hit the little button there that enables you to get updates whenever we go live. Follow me on Facebook, Twitter, LinkedIn, and I pretty much tweet every day. And actually, in addition to that, we've got more to tell you about. Our next show is Thursday, August 8th, and if you can't wait till then, and some of you have said, we want to hear more from you, we now have a new CB3LIVE update series. This is audio and video. These are short episodes, like really short, 5 minutes, 6 minutes tops. Some of them are even shorter. Just when I see something happening in the market, I can go live. We're on Spotify, we're on Audible, Apple, and this place called Castbox. All these different channels, or wherever you get your podcasts, okay? So tonight's show, the usual topics as you would know, but our extra special event, we have John Fatten from Sentinel here with us. John will join us in just a few minutes after this opening segment to talk about cybersecurity, how it affects all of us, what his company is doing to contribute to a safer internet for all of us. So there he is. All right. Look forward to that. We'll see him in just a few minutes. And here we go. So the monthly market review, as you know, this chart you've seen for the last 4.5 years, it's at the very top of the chart. As I said, today there was an intraday high hit in the S&P and the NASDAQ, and then the NASDAQ dropped 600 points at one point during the day. I mean, is that a concern? No, it just means that we've had a phenomenal year so far, and it's bound to have some profit taking from the traders, the big dollar players, the hedge funds that come in and they make trades. And those of us that are in the market for the long term should not be concerned about this. You guys remember we have 3 distinct secular bear markets that we've experienced in the last 100 years, most recently on the right-hand side there. But even then, the return of that bear market was still 1.5%, although it was kind of wasting our lives there for 14 years. All right. But we are clearly in an uptrend now, secular bull market, average return 12.13% per year. And we're going to be much higher than that, or at least we are right now. And we'll see how long that lasts. So a reason that I think the market can support and sustain higher multiples is what is known as the persistence of exuberance. This was a phrase coined by Fed Chairman Alan Greenspan in 1996. He warned of irrational exuberance in the market. I did not want to be in the market that day because I wouldn't say it went limit down, but it was a bad day after he said that. The problem is that the rally continued for 3 more years. All right. It's very possible that this excitement and the new technology, some of which you're going to hear about tonight in cybersecurity. I mean, the internet is just evolving in such an incredible way over really only being around 30 years. It's pretty astounding. But I think that this excitement is going to last longer than many of the worry warts think it will. You can see here the 11 sectors in the S&P 500. What we want to see on a yearly basis or over time is our 3 or 4 strongest sectors in the green, and we've got it right here. Year to date. This is just a typical day, all right? This is a few days ago. XLY, consumer discretionary, technology, and communication services. Those are the 3 driving sectors that are risk on. Financials would be part of that. Consumer staples usually isn't, but it's been unusually strong this year. The industrials have been somewhat of a disappointment. They're down near the bottom, along with energy and healthcare, which we would expect to be near the bottom. But again, the stock market isn't the economy, but it is the most prominent and the most frequently updated benchmark of financial and economic performance and consumer sentiment. So as I said, 40 new highs. I made that 41 because the high today was an intraday high. It didn't hold, as we all know. But this is portending to be a double-digit return year if there are no further geopolitical shocks. And let's face it, we have a lot of political shocks that are domestic in this country. In fact, the press conference that happened earlier today, which I didn't get to watch, I don't know if any of you did. If you did and you want to say something in the chat, feel free to do so. But all of this growth is happening despite what's happening with the U.S. political scene and our economic challenges, one of them being our U.S. debt hitting another new high of $37 trillion. That's just staggering. All that said, we are still seeing increasing revenues from S&P 500 companies. And the analysts that I follow, these are their estimates. So we're just entering, as you know, 11 days ago, the third quarter, which means in the next few days, you're going to start to see earnings pouring in for the second quarter. The estimate for that is around 5%. Third quarter, 5.2. Fourth quarter, which we'll be looking at and reviewing in January and February, 6%. So for the full year 2024, 5.5%, that is nowhere near a recession. That is nowhere near a starving economy, which makes it a tough case, frankly, for the Republicans. There are other problems in our country. But as far as how corporate America is doing, and some of this, again, is just the strength of the dollar and the strength of our economy because all of our competitors are just weaker than we are. But this is good news and it portends well for us. And I think that's one of the reasons you're seeing 41 new highs this year. We only have 19 companies that have reported earnings for the year. All right. So this upside surprise that I'm seeing, look at the number at the top, and it should be in red or something. I didn't use that color for whatever reason. S&P 500, 84%. Those of you that have followed the program for quite some time know that that average number is about 73%. So we're off to a really good start. 100% of consumer discretionary, financials, and industrials have beaten expectations. Technology underperforming at 60%, but again, we're so early in the race here. When I come back to you with the August show, we'll have this updated. I expect to see those numbers on this page play out in sympathy with what we're seeing on this page as far as expectations. All right, artificial intelligence. We started this segment, I think about 8 to 9 months ago, and it's become one of our most popular. And the reason for that is because people want to know about new technology. But one of the concerns is all these different areas where AI is being utilized. So here's a screen with Fox Sports News saying we're going to show you highlights and they're going to be more sophisticated because they're going to have AI. And we have the modeling industry basically being replaced by AI-generated models. AI in our smart homes. I certainly have a smart home with a lot of AI in it. This young child seeing a visual projection from an image, learning about the circumference of the world, artificial intelligence in agriculture. And I even put this article here about Microsoft exiting the board at OpenAI. So there's already a lot of jostling at the top of the feed chain here of the trillion-dollar companies. So it is absolutely an exploding industry. And guess what? There are more than just the good guys that know about this. The bad guys know too. And Many of you have said, what are we doing to protect ourselves in this age where the internet was already scary, all right? But with these cyber attacks, you can go to the FBI site. I have a picture of that on the screen here, and they have a whole category on cyber crime. Here's the major cases, how you can protect yourself. Well, that wasn't enough for me to share this with you. I wanted to bring on an expert. The person that I have wanted to bring on is so busy doing what he's doing. I'm so honored that he made time for us tonight. And here he is. John Fatten is a solutions engineer with Sentinel One, one of the premier companies in the cybersecurity industry with more than 2 decades of experience in corporate security. He focuses on providing technologies that best meet the latest challenges presented by global threat actors. So today's landscape, obviously ever changing. We've talked about this. There's just a whole lot that we need to do to prepare ourselves for what is up ahead. And joining me now from his Chicago office, John Fatten from Sentinel One. John, thank you for being here with us at CB3 Live. We appreciate it.
Thanks for having me, Charlie. Appreciate being here.
Awesome. Awesome. Well, just tell us a little bit about your background, how you got started in this. Did you have an interest in technology, or did you have an interest in security? Which one led for you, or neither?
Yeah, it was a strange start for me, but I got where I'm at now. Actually, I started out in finance, accounting, and I had a brief 5-year career in that before I said adios to that. I didn't want to deal with numbers. I wanted to deal with people and other things. So, part of that is I really needed to be around other challenges in that regard. So I actually spent about 9 years in host-based forensics. So if you think of various crime shows that are out there, like, I don't know, CIS, investigators walking out of homes. Yeah, they all walk out of the house, right? And they've got a laptop. Used to be a much bigger laptop. Now they're smaller. Underneath their arm and all that. So I supported organizations, or I should say solution providers, that provided technology to law enforcement as well as corporate entities. So that was my deal. I got to travel quite a bit, got to meet a lot of high-level law enforcement agencies in Turkey, Australia, you name it, all over the place. So
wow.
And then,
so international client base, because you said some things that have kind of triggered even further questions, and we knew this would happen. So international client base, but you have corporate clients, and of course, we didn't really talk about the difference between that and the needs of law enforcement. I mean, that's a pretty big.
It's a different world. I mean, corporate obviously it doesn't necessarily end up in a courtroom as law enforcement always will or typically will. But the fact is, there's tools for that, for them to gather evidence and then to secure that evidence so that it is what they say forensically sound, so that it meets specific, tests, so that it can be adjudicated properly. And then after that, I really worked for a number of different solution providers in that space. So that included RSA, Cisco, really on the cloud security side.
Sure.
And I worked with a couple different endpoint, we call them endpoint vendors. Think about AV or antivirus. We used to call that, there were so many of them, it was like a fight in a phone booth.
The McAfee's and Bit Defenders of the world, that kind of thing.
And that's really consolidated now. There's only really a handful left. And that's because of evolution, right? You've got, what once was signature-based technology to solve, for any type of known Trojan or other types of malware out there. Required a signature. You find the signature, you distribute the signature on a weekly basis. It was kind of a whack-a-mole game. And then, that's kind of got given by the wayside, right?
You're almost always on defense in that regard.
You are, and the attackers get faster, and so it's a cat and mouse game, and it was really kind of, it needed better evolution. And so what has evolved in sort of this next generation AV, if you want to call it that, is really an introduction into, a leveraging of artificial intelligence around that. And that would include things like machine learning, neural networks in that case. And I'll get into some other things that we're doing today in a little bit. But that's kind of where that evolution has happened.
So when you started, there was no AI. and cybersecurity meant something very different. It was probably just called corporate security because the whole cyber came in with the internet and technology and all that. So how do you sustain this interest? I would think it'd be very compelling, but we'd like to hear, how it drives you.
Well, maybe I have an interesting answer for that, but I would say that certainly my curiosity and then an insanely fast level of change is really what drives me in that. So I believe that my career may have gotten me somehow, may have resulted in a little bit of ADHD on my part. But the fact
Sure.
is, we're driven. We have to, know the landscape, know the attacker to some degree. There's really a lot of that. I'm not alone in this business. There's so many other folks that are in the security profession. But really, I think I go to work every day, and I know you might hear the term cyber war. We're in a cyber war, and now we got an
Sure.
election coming up. So you want to see some things happen, it will. Just wait. The fact is, it's good versus evil, right? I'm on the defense
Absolutely.
side, and there's attackers on the other side of it. So, we've gone from, you mentioned the internet 30 years ago, right? We had
Right.
what was called script kiddies back then, right? They all wanted to break into the bank or whatever, and it's,
Exactly.
hey, look what I did, I got in. But then that's moved into today. It's organized crime of different sizes, and it's also, state-sponsored threat actors out there, right? So you can imagine sort of why that exists. These individuals or organizations are in the known countries that you would expect, right? They're never going to be prosecuted because, in those countries, law enforcement really doesn't care if there's an organized group that's
Or they're hostile
collecting
to the
information.
United States,
Yeah,
right? And they're happy to
yeah.
see someone take us down.
Or just take money from us, right? So it's a very
Sure.
lucrative type of function. And if you think about it, we have an organization, we got office buildings. Some of these state-sponsored organizations do the same thing, right? Some of them are almost like corporations, right? The larger organized crime attack families. And
Hmm.
so those threat actors, they evolve as well. And when they extract money from a victim, that money goes into their R&D. So it's like a software company, if you want to think about it that way.
Wow. I hadn't even thought about that. What about like a utility company? I mean, that's another potential client, right? Commonwealth Edison or Duke Energy or somebody like that. We have this
Well,
fear that we read about in the media that, one day the water's not going to come on because the system's been hacked. Is that a real
yeah,
possibility?
there's a lot of regulations around those organizations, what they must do, the controls they have to put in place, those types of things. But they are a major target, right? Any critical infrastructure, healthcare, right?
Sure.
Or any place. Think about a healthcare, right? Why would healthcare be a target for threat actors? The reason is because it's critical care. They're busy. They have to serve their patients,
Hmm.
and if there's any downtime, they're likely to pay whatever's being extracted from them, right? Whatever's being asked. So
Right.
they want to get back on their feet as fast as possible. Education,
Ransomware we read about. Yeah.
yes, yeah, absolutely. So those are some of the industries that I think are hit quite often, but there's no one is immune to it, quite frankly.
What are some of the recent attacks that you're able to discuss with us? Obviously, I'm sure some of these are still ongoing investigations, as the FBI and the shows say on TV we can't discuss, but maybe there's some that you can.
Yeah, I would say that I'm going to share with an example here, a very recent example that you can all read about. It's actually amazing to me, and it's right down the street here in Hoffman Estates, Illinois. That's where it came from. But I'll tell you, if you had any difficulty buying a car in the last 2 or 3 weeks, or heard about any issues,
Hmm.
there was in fact, it's still not completely resolved yet, but there's a company called CDK, and their job, or what they do, their core competency is really building, um, I call it transactional documentation for the auto dealership industry, right?
Sure.
Which which only represents about 2% of GDP, by the way. So when you take that down for or impact that for 2 to 3 weeks, that has a major impact, right? They had 15,000 auto dealerships impacted by this
Oh my
threat.
gosh.
So CDK, look it up. It's widely known out there. There was a small Russian group. I wouldn't say not too small, but they came from a variety of other Russian attack threat actors. It's called Black Suit Gang. So they all have a different name and they do things. But in this particular case, they locked files. They got in pretty easily, I believe, and then essentially they demanded tens of millions of dollars in ransom. I don't know what they got. I know CDK paid something, but I don't know what that was negotiated to. But that's just the top of the iceberg.
So
So
when we
if you
see
think of
these
it
shows, this stuff really happens, is what you're telling us.
every day, you can read it all the time, right?
So how does a company protect itself? And I know that you're at the corporate level, John, and as you said, legal entities and law enforcement. But for us as consumers, you always hear change your password, use a lot of gobbledygook in the string, use 2FA. What else is there that we can be doing or to be aware of with the companies that we're hiring to work for us, banks, whatever, to ask when we're opening an account, hey, do you do this? Because we just heard from this security expert and he says you should be doing this.
Yeah, absolutely. I think passwords have to go away, quite frankly. But organizations themselves, they deploy. If you look at larger organizations, they already have, a deep bench, typically a deep bench of security professionals. Although they're rare to get, hard to find, and fill
Sure.
openings that are out there to get the skill sets necessary. But the fact is, there's a lot of different layers of security that they have to deploy. I think financial services organizations are pretty well, very mature, I guess, in that regard.
They're a top level
Not
target because that's where the
not
money is, obviously.
not immune, but again, they have to watch that constantly. So it's consistent vigilance on that, and then like I say, there's a lot of resources in this industry where you have to understand who the threat actors and evolving technologies, how do we defend against that. It's layered security, and that means a lot of different things on the network side, as well as protecting we call it endpoints, but there's been a big evolution from computing on servers and clients to really the cloud, right? Everything's transitioned to the cloud today. So,
Yeah.
you have a lot of development that's done there. Sometimes security is overlooked, and so that's a new target for some of the threat actors. And so, it's a constant battle.
If you guys have a question for John, go ahead and type it in the chat box because there's about a 30-second delay. So everyone wants to know more about AI and how to protect themselves, et cetera. I've wondered why we aren't, we have the visual retina scanning on our phones. Why do we need passwords if we have retina scanning and then another form of 2FA, which, these little authenticator apps, et cetera? I mean, again, I know this probably isn't an area that you deal with because you're dealing with corporate security, but as opposed to individual. But that seems really obvious. Shouldn't we all be using 2FA and all?
Yeah, I can't access any resources within my company's network without providing two-factor authentication, right? So that means
And one of them's retina, right?
or fingerprint.
Sure.
Absolutely. So it's either biometric or it's a separate application that's doing verification on top of my password.
Yeah. Okay. Well, this is a lot of great material. Anybody got any questions? Type them in. Where do you see things going 5 years from now? I mean, how will AI affect your industry? And frankly, how will it affect the bad guys? They have to be just the gap between the technology being introduced, the good guys using it, and the bad guys discovering it and using it against the good guys. Isn't that timeline narrowing as there are probably a lot more people entering the,
I think it is.
Yeah, the bad guys?
I think we can demonstrate that we've been very effective at adding AI models to do prevention on specific assets within an organization. And so some of that is AI driven. It needs to be AI driven because you can't, back in the signature days when people were doing those types of defenses, there's no way you can react quick enough, right? The attacks are coming way too fast. So you have to use an AI model to be able to prevent that. Those are available today. Secondly, it's really more along the lines of generative AI. How's that going to work in environments? So
Right.
now, we've introduced a generative AI model or application within our customer base that allows our customers to essentially search for any threats within their environment by simply asking almost like a generative AI question. So any natural language question, it funnels out and grabs whatever it can, brings it back, and provides more information and more conversationally to help drive an investigation. So it actually up levels the investigators that are out there. So a new level 1 analyst can be very effective at looking at things that might be dwelling in an environment.
So, and I'll finish with this one, but most of us in the retail world that are in small business are getting tons of emails every day. And the phishing, PHISH, right? We all know what that is.
Yep.
It seems that if we could install some sort of AI attachment to our client, not even on the server side, because we can't control the server side that's being pushed to us, but when we pull from the server to get email, and you guys, it's a little techy, but it's important. What can we do to have more of those just get removed from our inbox so we never have to sit there and make a decision on them? Because I'm really, really careful, but I came close this week. No, that's got to be good. And of course, you right click on the URL and no, that's not from the company. And the little lock was even on there. I mean, these bad guys are starting to use secured servers, right? I mean, this has got to make your job tougher.
Right. You definitely have the awareness, right? So that's number one. We got to be aware of
education,
phishing attacks. Those attachments, they lead to harm. There's ways to deal with that today, though. You still have to be vigilant on what you're clicking on. But with some of the protections in place, if you have those working for you, and there's I would say Defender might be an inexpensive first start in that. Some of the older AV solutions, I would throw them right out because I don't think they're going to help you in a whole bunch.
We moved everything in our office to Bitdefender. I think it's especially good compared to some of the older ones, as you're saying.
Yeah, that's really more SMB related for sure. And there are tools out there. Everything's got to fit within a budget as well, right? So.
I know you guys are a corporate supplier, but if many of our clients on the phone want to learn more about AI, I think I've seen some white papers on your site or some PDFs. I mean, they can find you guys at Sentinel 1, right? Ticker symbol S if you want to follow them. But do you have some general educational PDFs out there they could download and look at? Or?
Yeah, it'll make your head spin a little bit.
That's what I figured.
There's a lot of things out there. There's videos that probably explain a lot of things. Great blog posting, by the way, we have out there. So that blog page would be great to look at. So just go to our webpage, look at resources, go to blogs. It's fascinating to see, what's going on in the world today.
Well, I will spend some more time there and add it to my own brand new podcast blog. And thank you, John, so much for sharing this with us and encouraging us. We will beat the bad guys, right? This story has a happy ending.
I got to keep a job, man. So
yeah, exactly. All right.
Gotta help them too.
Thank you. Let me see. Did I miss anything? Office writing scenarios? Yes, I get it. Okay. Steve, thanks for those comments, guys. Hope you enjoyed it. We will see you next time as this field continues to evolve, John. Take care.
Great.
God bless. All right. All righty, folks. In U.S. policy, as you know, we care about U.S. policy. We don't so much care about politics, but politics leads to policy, which leads to personal impact. There's no way to say it any other way. What is going on right now with President Biden is the number one story in the political scene. Is he going to remain in the race? He says he's resolute. He's going to do it. He has the delegate count to stay here. He has the party leadership backing, at least as of this recording. And he only has one Senate opposition. Now, when I first put this slide in here a day or so ago, he didn't have any. But now one of the senators from Vermont, and it's not Bernie Sanders, it's the other one, is now opposing and saying, no, he needs to drop out. So recent polls are showing that Trump is leading in these several key states. These are the these are the gray ones on the map, okay? And Trump, unlike last 2020 election is ahead in most all of these states. But that doesn't necessarily mean it's going to stay this way. We're only in early or mid-July, and the election's not till November 5th. So watch that. I do want to point out two things to you in these next two slides, and you'll see why when I handle my customer or client viewer questions at the end. This is just an interesting statistic. Why do we have such unequal distribution of voting in the U.S.? And that is because, look at this slide, 8,800,000 people live in New York. That is more than the population of all but 10 states. So New York itself, and that's the 5 boroughs, is bigger than 40 of the 50 U.S. states. On the other side of that, Kansas, which is not a particularly big state, can feed everyone in the U.S. or everyone in the world for about 2 weeks. If you look at the graph, you'll see the population growth of China, India, and the U.S. Obviously, India growing faster than China over the years here. But look at, Kansas was able to, provide enough food for, I think, about 8 months for everyone in the world just a few years ago, well, 45, 50 years ago. And of course, that's dwindled because the production of wheat can't possibly keep up with the population growth. But this is important, and I'm going to mention this at the end with the customer question. So remember these two slides I just showed you. We are seeing evidence now, and I find this particularly compelling, that after the admission of Sweden and Finland to NATO, that there is a push from within Ukraine and Kiev, obviously the capital there, saying that they want to become part of NATO. And in fact, they think that is maybe the only surefire way to make certain that Russia does not attack Ukraine again after there is some kind of ceasefire. We absolutely believe that NATO is in Ukraine's future, said this Assistant Secretary of Defense for Public Affairs at NATO. So say what you will. Why do I have this on a financial show? Because it matters for world peace. And world peace is important, certainly for all of us to live higher quality lives, but the markets do not like surprises. They do not. So this is a positive if this actually occurs. I think it was a positive that Sweden and Finland joined, especially because Finland has a multi-hundred-mile border with Russia. So we will see where that goes. The Fed, obviously in the news this week, Jay Powell testifying and said in his second day of testimony, we might be able to ease before we get to 2%, but 2% is our target. Please don't misconstrue what I am saying, he said. He stated that more good data could open the door to rate cuts, but emphasized the need for sustained progress towards the 2% goal. You've heard about the last mile of delivery for a package, right? The toughest and most expensive mile to get you something from Amazon is that last mile. Now, it might be 1.2 miles, I'm being flippant, but it's the direction from once the truck enters your community to getting to your door, and that's because all the stop signs, and I got to get out, and then I have to get bitten by a dog, etc. So that last mile is what's tough. Well, it actually has the same way, respectively, dropping from 3 to 2% with the Fed funds rate, with the inflation rate, and the Fed being able to go in and reduce interest rates, all right? He did acknowledge the U.S. economy is no longer in an overheated situation. So he said inflation is showing signs of easing. So the key indicator, CPI, Consumer Price Index, was just released today, reaching 2.6, closing still above the Fed's 2% target, but it's come down quite a bit. That said, the unemployment rate increased slightly to 4.1% in June, and job creation slowed, all right? So futures traders, and I follow those guys, I trade with them in many cases, say there's about a 75% chance that the Fed will make its first rate cut by September. So the Fed wants to see consistent progress towards the 2% inflation rate before cutting. Makes sense to me, and I actually liked what Powell did in the last press conference. I thought he was doing a good job. I've had my problems with him, but he handled himself well. with the Senate fellows and women that were interviewing him. And I think he's going to stay on target, and that's a good thing. So the employment report, as you know, last Friday was the monthly employment report. So it actually came in a little bit stronger if you look at the top line number. But once you dig into that and look at the private non-farm payrolls, the survey was for 160,000, the actual in the private sector. So a lot of these jobs in the top screen that you see there were coming in from the government. All right. We don't want more government jobs. We want less jobs. All right. So we want less jobs at the government level. All right. So the non-farm payroll at the private sector was a positive. All right. But the unemployment rate is now back above 4%. So you can see on the top screen, it went from 4 to 4.1, which doesn't seem like a lot, but it's going in the wrong direction. And the underemployed or discouraged workers, which is U4, also rose. Inflation just came out today. We were at lifetime highs when this number came out. And then I think everybody that was on the trading floor used that opportunity to reduce their holdings. And so that massive profit taking came in. All right. So the inflation rate rose by 3%. It was expected to be 3.1. That's a decrease. That's a good thing. It's certainly a big decrease from 2022. CPI declined by this 0.1%. And the contributing factors, the biggest two, are energy prices, gasoline prices, and lodging prices. Shelter costs, which would be rent and homes, actually rose to offset some of this. But this is a positive. Again, though, the Fed wants to see that 2% target. High unemployment rates have cost presidents a second term. So if this 4-1, there are two more readings. There's one in August, September, actually three, okay? The November reading will not come out, but there's three more readings. And if the unemployment rate continues to edge up, that's going to hurt President Biden, certainly more, but it's going to hurt Donald Trump, even though he had high unemployment due to COVID when he was in office. So it will likely hurt President Biden more than it will hurt President Trump if inflation stays pertinacious. And there it is, the word of the day. If inflation stays pertinacious. Oh my gosh. So economic indicators, as you guys know, I look at economic indicators, a variety of them. I'm going to show you several here. And the reason I do this is because I'm looking ahead several months. All right, I'm looking ahead several months, and I want to see what's going to move the market when these indicators, if some of them do or do not come true. All right, so here's what I'm looking at right now. ISM manufacturing, all right, it's contracting in June. New orders almost stabilized. These are still below their blue lines, so this is not a good situation. This still means that the economy is slowing down, and it's slowing down, again, because of what the Fed's doing. They're not dropping interest rates. So this has the effect of muting the economy and muting growth. Well, but they have to do that. Why? They have to do that because of inflation. All right, so that's not a big surprise. All right, so the Conference Board's consumer confidence indicator, as you would expect, is on the downturn. Because consumers see this happening, and when they see the economy slowing down, they're thinking their jobs might be at risk and thinking, okay, maybe this is a bad idea to keep spending, so we're going to stop spending. So it's just a vicious cycle. This is not happening just yet. These numbers are not plummeting. Look back in 2020, right? They plummeted there, and it was really obvious that we were going to slow down on the economy there. But it's not so obvious right now, which is why I'm looking at this as a future indicator. Same thing with housing, all right, and small business sentiment. Small business sentiment actually turned up a little bit. Home builder optimism down, and their confidence, home builder confidence, as you can see from all those different years there, is just heading down. And we have to, obviously, it's the biggest discretionary item in the economy, the home builders, and we've got to see that continue to get back on the upside. I expect this to happen when you see the first rate cut. You'll start to see optimism come. And could it be a political rate cut? Could Powell sit here and hold on to this and drop it in November? He would definitely be accused of manipulation, political manipulation, and it would look like he's favoring the conservatives there. I don't think that'll happen. I still think we have a more than 50% chance of our first rate cut at the September meeting. That's what I'm saying here and have been saying. All right. So the program's doing well. I mean, we're just killing it. It's a really good year. Those of you that have seen these charts, this is the benchmark account for CG. I want you to know, if you're a client watching this and you're one of the 27 people that's come back to us from LPL, this little piece I'm going to talk about is important. You might be seeing this 25.7. This is my own account, Roth account. It's the benchmark for CG. And if your account is not in sync with this, the reason that it's not is what is called first year variance. So go to my podcast channel, again, on Audible or Spotify or Apple or a bunch of other ones, and listen to the episode called First Year Variance. All right? Because you can't be in sync with me because you haven't been here the whole year. We even have some clients that are doing a little bit better because they got in the late part of January or early February when that market had a downturn and they didn't experience that. So if you look in the yellow columns, you'll see the winners there that are significantly larger percentage-wise than the losers on the right side. This is all part of our strategy to hold on to winners and sell losers. This is 1 year trailing. You can see the blue line on the left. Obviously, we got behind him, but we made up for it. We caught up, and we're now equal to where the S&P is, but we do have our risk proposition and strategy in place, and the S&P doesn't. It's just going to stay long, and most people don't want to stomach another 2000, 2008, 2009 drawdown. So you'll see over a full year, bigger winners here, 4%, 3.8, whatever, but the losers you'll still see are under 1%. Okay, still under 1%. Now, the way this plays out in this matrix, I've shown you this. So our biggest profit on a stock, again, in the benchmark account, you could have a less dollar amount than this or higher, depending on how big your CG account is. But 11,500, the biggest loss, 2,200. Okay, so, but it'd be great if we could do that on every trade, right? But the returns percentage, the number of wins is only 37%, number of losses is 62%. So psychologically, it's not easy to trade this methodology that I've developed with the help of Tom Basso and others that I've talked to you about and introduced you to on this show. But we have a strategy here that's really working. I mean, you can see that the average win on per trade is 1477, which doesn't sound like a lot, but again, on a small benchmark account, it's really pretty substantial. So GI for the first time actually dropped below the S&P, but it's going to be interesting to see if we have a 5% pullback. I'm just warning you guys, I could see 5 to 7 here. We're entering the dead part of the summer. It's highly likely we're going to see a pullback unless there's something else to instigate some phenomenal earnings. And you saw earlier in the show that we have had some real good earnings. So let's hope that those continue. But if we have a pullback, you're going to see GI narrow that gap because, again, it's only 60% stocks. It's a more conservative program, and we have more and more clients now that have all three programs, and the third one being discretionary strategies, or DS. So look at the yellow columns there. So we have 15% winner, and this is just year to date, okay, in NVIDIA, Meta, Google. And then on the losers, you will see, oh, that's more than 1%, Charlie. You're right, because remember, DS does not have the same money management strategy that CG and GI have. If you want explanation on that, I'm happy to give it to you. Why do we not have the same risk management strategy? Because these are extremely volatile stocks. Look at the blue line and how it's just jumping out there ahead. And here we are, lifetime on this benchmark account at just about 330%. In fact, I think yesterday it went over that. This was actually run from Tuesday's data. So if you want to be in this program, and you can see under the CRT there, I didn't put it in yellow, but Microsoft 50%, Apple 40, Amazon 40, and yet the losers are relatively small, but that drawdown from 2021 to 2022, pretty vicious. So just be aware of that. We are here to talk about this at any time with you guys and have you understand it. But there it is. A big thank you again to John for being with us. Hope you guys enjoyed that, got something out of it. If you have any further questions, you know where I am at CB3 at CB3.com. Let me see if we got anything in the chat here. Surprised you guys didn't have questions for John, but he really was very comprehensive in what he said. So yeah, Scary Smart, Steve. Thank you. That's a good book to look at there. Scary Smart. I love it. Frightening scenarios, yeah, potential solutions. Obviously, when this involves our utilities or power grid, it gets even more harrowing. So late to the party, but enjoying the show. Thank you there. The show business, another item for cybersecurity. Users are the weakest link. And I think there's just awareness. So if you, and I'm not the youngest guy on this broadcast, I know. But if you know someone that really needs to be educated about the sort of things John was talking about, you've got to take some time and sit down with them and say, look, you've got to have better passwords. You got to be more careful what you open in email. I would say for most consumers, and Andre, I know you're in this area too of cybersecurity. I would say the biggest thing we can do is really refine our email using habits. And that means which emails we open, which we delete, how we filter and that sort of thing. But I think we're going to have more on this topic of cybersecurity as we move forward. So a reminder again, the next show, August 8th, Thursday, August 8th. And you don't have to wait till Thursday, August 8th. Tune in every week. I'm uploading one. Actually, the first week was last week, July 1st. We started and we put out a podcast every single day through the 4th of July. And we've done one this week. We'll do one or two every week. It'll be a variety of evergreen content, which are things like this first year variance or even your kids saving for college. All right, short bite-sized wisdom that I hope that you can use. But then I'll also have current pieces that can be useful for you. Like for instance, if we have a debate and something happens politically, or else something happens in the market overnight and I can immediately react to it on my podcast engine. As we close every episode, for we have not been given a spirit of fear, but a spirit of power, love, and a sound mind. Wonderful words from Timothy. Whoops, didn't mean to go there quite so soon, hit the wrong button. Thank you guys for being here. I know it's the summer doldrums. I think our viewers are a little bit down for the night, but they always know they can come back. We've got some episodes now. We have one that's got 750 views. Normally it's not quite that much, but tell your friends. All right, we're doing some marketing. We're trying to get the word out there. The podcasts are going to help. I think you'll be able to see me more frequently as we get deeper into this election season. I think we can all agree with the Republican convention starting next week, and then in August, the Democrat convention. Who knows what that's going to be? All of these influences can move the markets. And certainly our enemies are watching what's happening here, and they are looking for an opportunity for themselves. They do not have our best interests at heart. But I'm watching them all the time. I'm keeping you guys up to date the very best that I can. Reach out, contact me anytime you want, and I'll get back to you, okay? We're super glad you're here watching. Please remember that at CB3 Financial, we don't just manage your assets, we become one of them. Enjoy your summer, and I'll see you in August.